Hello, hello, Mavericks. This is Rob Reinwald. This is the Currency Room. I'm joined by Ankit Sharma. As always, let's jump into it. We had a really busy week this week. In this session, we're going to be going through the news of the week. We're going to talk about where the market is, and when we're going to look where the market is likely going, and we're going to find some setups to take advantage of that.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Let's start out with what happened last week. Let's go back to last weekend. Last weekend, we had a huge down day in the stock markets, and it just reverberated across all other asset classes. We saw big jumps in currencies. We saw big fall in cryptos. So over that weekend, the market had a little bit of time to digest it. And on Monday, the market decided that it overreacted. And markets opened up about 1.2%. And we pretty much stayed there all week. So we regained about 60% of Friday's loss. So we're not back into like super bullish territory, but we're definitely not where we were last Friday, where I even said, hey, I'm a little worried that this bullish market might be over. Here we are a week later, everything is calmed down. And remember, the thing that sent it lower was the threat of 100% tariffs on China. And President Trump, of course, walked it back. If you haven't heard of the taco trade, TACO, it's a very popular phrase going on online. It's the Trump always chickens out trade, meaning whatever Trump says that scares the market, just buy it because he's going to walk it back anyway. Ankit, have you ever heard of the taco trade?
Oh yes, I feel like that's one of the most popular trades that has been going on for the entire year, which again comes from the whole book of Art of Deal, where you walk back to only go back and make the deal. So it seems like at this point, it's like everybody expect that, and a lot of movements has happened based off that.
And one of the things to notice is we, again, had that big worry last week and then things bounced back. What didn't bounce back? What didn't bounce back were the cryptos. There was no buying in cryptos and actually very intense selling this week. However, gold surged. Gold absolutely surged. It was up huge. We'll take a look at the chart here. Again, all-time highs here. And we've gone what's called parabolic in gold. Look at this little movement here, parabolic. What typically happens after parabolic moves is you get a parabolic move to the downside. These are also known as blow-off tops. I think gold has had an amazing run. I would definitely not want to be aggressively short gold, but when you see these kind of blow-off tops, these kind of parabolic moves, it's typically more of a sign of we're at the end of the run than in the middle or the beginning. Of course, we'll be talking about gold here over the next couple of weeks, but I think for now, I think you got to be really cautious to be long gold, but I wouldn't want to be short it either. All right, let's move into what happened with the U.S. government shutdown. We do not have many economic reports. What we did get was the Aussie employment report, and it was worse than expected. We're going to take a look at the Aussie. I actually think the Aussie is one of the more interesting currencies this week. And then we also heard from the UK, and their GDP came out as expected. I also really like the pound this week. So we'll take a look at all that here in just a second. But let's run down all the numbers from last week and just see where we currently are. And then we're going to talk about where we're moving towards in the future. If we take a look at equities, equities were up about 1.5 to 2%. Last week, they were all down 3.5%. So as you can see, we've recovered a bit of it, but not all of it. Take a look at that crypto number. That is a nasty, nasty number. Down 9% across the board in the basket. We're going to take a look at them. I also think they're at a very interesting place as well. Gold, we talked about surging, and oil is now solidly below $60. That's not great. I know we all like cheap gas. I get that. But when oil goes too low, there's layoffs, and those layoffs cause recessions. So again, one of these things that if you're looking at economic numbers is a little bit of a warning sign that the economies maybe aren't as strong as the markets are saying. With that being said, here is the S&P chart, and you can see we're sitting between moving averages. Whenever you're sitting between moving averages, it's kind of a no man's land. This big move took us down. You can see we recovered, but take a look at the price action. Anything below 6,600 was aggressively bought. Anything above 6,700, aggressively sold. We are really in this range here, right in the middle. We've got one of our moving averages is flattened out. This is a point in the market where I just don't feel comfortable calling bull or bear. Now, as a younger trader, I always had an opinion. And again, I still always have an opinion, but what I mean is that I always was convinced I knew whether it was going to go up or down. There are now times where I think I'm better off doing a coin toss because I think that if I try to give my opinion, I've got lots of biases, I've got lots of things going on. When it's not clear, now I'm going into my brain and pulling out reasons I think the market's going to do this or this when the technicals aren't saying anything. Technicals aren't clear at all. Ankit, do you feel the same way? And if not, how are you leaning in this market?
Absolutely. I kind of relate to that too. They're like I said, we always have the saying, there's old traders and there's bold traders, and there's really old bold traders. Must say, I definitely was bold in my beginning phase of trading, but you're trying to call the tops and the bottoms. Like sometimes that's a very painful way of trading. Sometimes, so yeah, it's better to know when to sit out and when to be in. And what we see right now, this is a perfect example of where you trying to figure out what the market is going to do is quite difficult, because you look at the candlesticks that we are getting since last Friday. Like just a whole week of trading was pretty all over the place. And we had a lot of scares, a lot of big movement, and then this is where you try to figure out, like a lot of times market doesn't really give you a good explanation of why something is happening. So the best thing you can do is drop the lines and see which way it breaks. And if you really look at the last Friday's move, we haven't really broken out either above or below. Like that, the high and the low, like we just kind of stuck in that range. So one of the things I always say is that you're looking for which way is going to break first will usually lead in that direction. And right now, you can see it's just going back and forth. But one thing interesting that happened this week was that the volatility jumped to the highest level since May. So that was I think that the volatility was really the name of the game this week. But we're just getting a lot of movement, but not a whole lot of clarity in that direction. So yeah, like this is one of those weeks where you kind of chalk it up and take advantage of a little volatility. But right now, if I have no idea which way it's going to break, one higher or lower. But that's something we'll find out in the next couple of weeks as we get more data. Which I think next week we're getting some CPI data. I think that's when we will have a much more bigger driver of those moves. But right now, I think it could go either way.
Remember, the reason we take a look at this chart and we take a look at equity markets, it's the best way to see if you are in a risk on or a risk off environment, because that very basic premise, risk on, risk off, drives most asset prices either higher or lower. And so what I'm saying here, and what Ankit's saying too, is that right now, there's not a clear signal of whether we're risk on or risk off, so you can't use that in your analysis of currencies and cryptos and metals. It's just not there right now. So we really can just throw out the risk on, risk off correlations here. And now we just have to dial down into what's strong and weak individually. And if we take a look at last week, take a look at the European currencies. I like the European currencies last week. I talked about how they're the strongest and they're likely going to continue to stay strong. Take a look at that. Swiss franc was my number one on the board last week, and it was the best performer. That being said, really not big moves last week. Not big moves at all. We talked about the dollar and the yen. You can see that they moved against each other, but not a ton. We'll take a look at this pairing as well. But then this right here is the story. This to me is telling the whole story. The markets bounced. The markets bounced. They had a nice bounce off the bottom. Look what did not bounce. The growth currencies did not bounce. It's telling you that if we get more weakness, boy, these things are likely going to continue to fall. And if we get more risk on strength, they're likely not going to get a bid. So this is where I think we need to be focusing in Forex. In crypto, it was ugly across the board. You can see Bitcoin Cash really gave it up 14% on the week. So we'll take a look at cryptos. I think they're in an interesting spot, and especially how and where they're closing on Friday. And we'll talk about that when we get into the individual stock charts or the charts. All right, so where are we right now? The S&P, we're at a +1. A +1 where we're still above the 50-day moving average. We're at the 20-day, and the slopes have now leveled off. We're still at a mildly bullish outlook. Until the technicals change, that's where we are. It's telling us that yes, there is mild bullishness, but there's not a big surge in risk on activity. So we just can't use that as a correlation. If we go in here and take a look at bonds, you can see that we broke below the 4% area. And that's really where we're going to be closing at on Friday. 4% has been a pretty significant level. And under that, the dollar usually starts to weaken. The dollar has held up really well in the face of falling interest rates. So remember, when correlations don't work, throw them out. It's not working right now. Lower interest rates does not mean that the dollar is weakening at the moment. We'll take a look at that dollar chart for sure. And here is the crypto basket chart. So again, this is a basket of our 4 cryptos here. Again, there was some support right around this area, and it broke on Friday, but take a look at this long lower shadow. It's going to be interesting to see where crypto actually closes on Friday. We're doing this a couple hours before the crypto close, and we'll have to see what happens over the weekend. But that's telling me it's trying to hold on. It held on here, had a nice little bounce, held on here. With that being said, I don't think you can count on any more than this little bounce because we are below the 50, below the 20 moving average. They're both sloping down. I don't think you want to be long in the cryptos. And if you do, then it's going to be a very short-term trade. What is on the calendar for next week? Not much. But we have a ton of CPI stuff. That's it, just CPI. You can see Kiwi CPI on Sunday, CAD CPI on Tuesday, UK CPI on Wednesday, and supposedly we are supposed to get the US CPI report on Friday. I'm looking at this week thinking the market is going nowhere. Things are kind of pinned in a range. I kind of think it's going to be range bound until Friday. Anka, what do you think about that call? Fairly range bound until Friday.
Yeah, I mean, I agree. I mean, if you really look at like how markets were behaving till like last Friday with this whole China scare, and since like yesterday was a bit of a scary day because we had a lot of movement across the board, and it looks like suddenly all hell's gonna break loose. But then this morning I think we had comments that the President Trump's gonna meet the China's president in a couple of weeks. So that really calmed the market down. The whole narrative got calmed down. So now, without that big narrative of a risk off, I think the market's likely to recover a little bit. But if you think about what's the next catalyst, the China's okay. That's in the rear view mirror. What's the next catalyst? And I think that's the CPI and the employment data. Like that's what's really going to be driving the market next. So until we get all that data, I think we probably just go trade in a range till we get that data. And I think that will be the next catalyst that's going to move the market. So I'm definitely focused on that next week with Friday with the CPI data. I think that's going to give us the next catalyst to have a big move higher or lower.
I totally agree. So for the first 4 days of next week, I'm looking for range bound trading conditions. That's it. I'm not looking for anything trending. All right, let's go in and take a look at our trend and velocity scores on all of our crypto and our Forex trades. All right, so here we have Bitcoin. Bitcoin is looking the best, in my opinion. It's looking the best, and you can see we had that pierce on Friday, and it's clawing its way back. So again, when we take a look at all the cryptos, you can see here that Bitcoin is the closest one to holding on to its major support level. We come over here to Bitcoin Cash, we can see it broke it. It totally broke it. You know, where it should have held, it broke. It didn't even hold this one, it broke. So Bitcoin Cash is not where to go if you're looking for a bounce. Ethereum, you could make a case. You could say, okay, it's hanging around here. It's holding its area. We got a long lower shadow. Okay, you know what? I could make a case for this as well, that it's going to have a short-term bounce like it did back here. But when you take a look at Ethereum versus Bitcoin, you can clearly see that Bitcoin, and I'm going to go back to the Bitcoin chart, the daily chart on Bitcoin looks better. It just looks better. Made a new swing high. The moving averages are basically still flat, where the moving averages on Ethereum are clearly sloping to the downside. So I think if you're going to make a play, then you're going to look at Bitcoin. And here's Litecoin. Again, just a low base. We broke down. Yeah, we held on, but nothing to be excited about there. I'm going to talk about Bitcoin when we get to the part about potential trades, but other than that, I think you want to stay away from crypto until they actually start to move higher. Okay, let's start off with that dollar.
All right, absolutely. Well, I must say that, Rob, I will give it to you. You were definitely more on the right track as you had made that call with the European currencies. Because if you look at the dollar was just kind of left in the dust there. One thing that we did notice this week was that dollar did not act as a safe haven currency. We saw big movements in the yen. We saw big movement in Swiss franc, and even euro acted as a safe haven currency. But then the dollar really was missing out of that action. So going to next week, I think dollar is going to be interesting because we get the CPI data. One of the things that been going against the dollar is the rate cut expectation. Markets are right now fully pricing in two more rate cuts in the next two meetings. So I think this is where that data is going to be very important, because either markets are getting ahead of itself, and we see a repricing, or we see the data actually gets weaker, and then that actually fits the narrative, and we see a bit of a move there. So I think that's where dollar is at. So I like the fact that dollar has a +2. Like I still don't like it as a short, because if you look at the pattern, we have made higher highs and higher lows. So this one just looks like a pullback to me. But as long as it stays above these levels, I think I still like it, especially going into those data points. I think dollar would be a good tradable currency there. But right now, you can see with the trend and the velocity, when you get the trend and velocity going the opposite way, then you know that this is not really the right currency pair or currency to be in. Now, yen, on the other hand, was a big surprise. And I had a lot of questions because, with the yen, the way we were looking at yen, we were very much bearish on this one. Trend looked so much clear. We were looking for a bear rally. And I must say that this is still a bear rally. But this bear rally was fueled by that risk off sentiment. So if you look at the last Friday's move, so the yen was pretty weak, but look at the last Friday's move. We got that big move up on that news. And then on Monday we saw retracement, and then here we are. Look at the candlestick today. We had a massive move up, and then we just reversed. So this yen is just running off of that risk on and risk off trade. Now, from a technical perspective, it failed exactly at that the resistance level. So if the market sort of calm down, if the volatility goes down next week, and we don't have a whole lot of geopolitical concerns, and I think in that case, yen probably be a better short. So I still like the yen on the short side, as it's giving us a pretty bearish signal going to next week. So we just want to look for the velocity to start picking up. As you can see, we have been above the EMA, and we have been above the parabolics are. And this is one of the reasons where I just never got triggered on this trade, because it just, the velocity just never turned lower. So that's the one thing I do like going to next week, is looking for a shorter the yen trade. Now, when we go into the other currencies, well, I also like Swiss franc on the short side as well. Again, going back to the same narrative that if we don't get a risk off sentiment in the markets, then these are the ones that did really well, and you can see we're all getting very bearish reversal candles today. So that could lead to some more further pullback going into next week. So I think both the yen and the Swiss franc were the biggest mover. I think they are actually look decent on the other side as well. And we'll look at the euro. Euro definitely showing more weakness compared to the Swiss franc. So yeah, I think this one also you can see that the bearish candlestick today and the velocity is already kind of moving lower. So yeah, I think it's a pretty simple trade. If you see a risk-off environment, go into these currencies. But once you see market stabilize, then we probably see money coming out of these currencies and going somewhere else. Now, the British pound is the currency that I wouldn't say that is acting as a safe haven currency. This currency is kind of holding in. You look at that level where it is at. I mean, this is a level that we have been stalling over and over, and I just don't love the British pound here based on this price action. I think there's better currencies to trade. Now, when we talk about better currency to trade, I mean, there's the growth currency. Like CAD is the one that we've been looking at, and you can see. Look at the swings on this. Now, it's pretty clear. There's a big support level and there's a big resistance level. Now, in between that support and resistance, there's decent opportunities. So going back to Rob's strategy, which is, hey, I'm looking for range bound conditions in the beginning. Well, that's what means that you have a clear range in front of you, and as long as it stays above that level, above the support, maybe there's a bit of a upside potential on the CAD going into next week. And you can see that the velocity is also picking up here as well. So all the underperformers are the one that I'll be looking into buying it next week. Now we can see the same thing in the Aussie and the Kiwi as well. I mean, Aussie actually, look the worst because this is the one that's been holding it a lot better. As you look at the move there. So this Aussie is very correlated. Remember, we looked at the chart for the S&P. I mean, this chart looks very similar to the S&P chart. The only difference is that this thing broke that support from last Friday, and now here we are with the candlestick today. That's giving us a nice little bullish reversal candle. So I think this has a decent chance to fall, go back up into the range. But I think it's pretty clear that the Aussie is acting more as a risk on and risk off. So remember, there were times where Aussie doesn't really follow risk trends, but right now I think those risk trends are pretty in sync with the broader markets. And then lastly, we take a look at Kiwi, and I must say that Kiwi, we are getting some bounces, but nothing too substantial. I mean, look at the velocity score. Every little rally that happened, they were very small little bit of rally. Nothing has started a higher high and a higher low. Overall, this is still staying in the downtrend. So I think this is all going to come down to the Aussie Kiwi as well. And I was watching Aussie Kiwi all week, and that thing just stuck in that range. So I think there's still that these patterns I think will continue here because we are not really seeing any reversals. So I think Aussie probably do a little bit better while Kiwi actually looks the worst from this chart perspective. So I think it looks pretty clear on what to buy and what to sell, and also what to avoid.
And if you take a look at how everything stacks up, I love this. A lot of times we get to where most of the currencies are trendless, where they're all sitting in this range and we say, okay, look, there's not a lot to do. But take a look at this. We're getting clear trends here in this market, which we love. We love. It's very clear that European currencies have been the strongest. But as Ankit said, if we do get a risk on move, I do think you probably see a little bit of weakness in the euro, Swiss franc, and yen. These are the three that have been working as currencies of safety. However, these have been relatively much stronger. I, for one, prefer the yen short this week. Absolutely prefer the yen short. And unlike you, Ankit, I actually like the pound long. I actually like the pound long here this week. I think it's showing some relative strength, especially to the other two. The other one I'm really interested in is this Aussie. that candle on Friday, right at a 50-day moving average. But again, this counts on the market rebounding. The Aussie is a risk on performer. If the market doesn't bounce, I don't like anything. Here's the problem. I'm very clear on where to go if the market bounces. I'm not very clear to go on if the market sells off because, Euro, Swiss franc, I think are an easy call, but what are you short? Probably Aussie Kiwi is where you stay short in that scenario. But when we come to the velocity score of where things are moving right here, right now, you can see that we are in the middle. So we have clear trends, but as far as right here, right now, we do not have clear velocity. So that is going to be a problem because we can look at trades based on a daily chart and see where the trends are going. But on the shorter term velocity chart, we're going to see it's very, very messy. So let's jump into it. So I talked about looking at Bitcoin and I said, look, it's at a very interesting spot. We had this little bit of base here. We broke out of the base. We tested it. And here we're down here. We slammed through it. But you can see we're getting a long lower shadow here on this. Now look, I'm not going to take this trade. Why? Because my rule is I am not allowed to go long if something is under the 50-day moving average on the daily chart. And this one is below the 50-day moving average. So I will not be taking this trade because I do not violate my rules anymore, which I used to do all the time as a young trader. But now it's like, nope, got to sit by my rules. However, with that being said, it looks like this thing could be poised to bounce. If you're looking to trade crypto, then this is probably the best looking trade here. We're going to get candles on Saturday and Sunday. And I think when you come back to the market on Sunday and you take a look, did it hold that 107 area? If it holds this 107 area, then I think, okay, we probably get a bounce. And I wouldn't really go past like 112, but that's a decent, 3 or 4% of a decent move. Again, I don't trade this way because I do not counter trend trade from the daily chart. It's a rule I've made up a long time ago that's kept me very safe. But I do think this is an interesting one in crypto. The other trade I'm looking at is pound yen. I do like pound on the daily chart, and I also like yen as a short on the daily chart. And you can see here the pound yen, we got this really nice breakout after a 3-month high base. We break out. Now we're getting a pullback. We're pulling back to that moving average line, and we got this nice fat hammer candle here. Okay, the only question is the timing. You could see over the last 4 days, other than this one little spike lower, it's pretty much been flat. We have RSI that's mostly flat. So if we go into our shorter term 4-hour and 1-hour chart, we can see that it's still drifting down, so drifting lower. I am not interested in this one at all until we break above this trend line. Where is that going to be? Somewhere in the 202.50 area, maybe 202.70, maybe even all the way up to 203. I am not looking at this until we break through this line. And actually, I'd like to break through, retest, and then bounce. That would be a much better trade. And that's going to take several days to develop. So this is my favorite trade for the week, but I am definitely not looking to be anywhere active at the first part of the week. Okay, what are you looking at?
Hey, Rob. Well, I think it's pretty clear on, like the things that I'm looking at is more like a continuity from like all the things that happened today. I mean, like, let's just start with the dollar Swiss franc, just looking at that bounce. I mean, all these candlesticks on a daily chart look so interesting because you can see like we're getting a big long wick. And usually what happened is that when we get the big long wick, as you can see where the clear support was, now that's a very established support and resistance line. So you can see that like markets likely to bounce a little bit off of here. So I think what we're going to look for is look at the highs for the day today and see if we start to break above that. And I think from a risk to reward perspective, there's going to be some decent opportunities in the early part of the week. So you can see we have trended lower. Now we can see our sides picking up. So look for a little setup over there, have a decent, reward to risk ratio. I think these trades are not the bad trades to take a look at just for the first couple of days as these retracements work out. Same thing goes with the euro dollar. I'm also taking a look at that one as well. It rolled on a daily chart. It kind of rolled nicely off that little, it still kind of looks like a bear rally because this made it, a new low. I just make a lower low with a lower high. So this again, same thing goes in the same thing. Like we look for some areas to kind of break again. We are kind of consolidating a little bit here. But again, these are the shots that I would like to take early next week as a continuity trade. So, and same thing goes with the yen crosses as well. Dollar yen goes to number one. This is the one pair that I was kind of closely watching. As you can see, this one also had a nice bounce, and we just kind of holding that level. And this is what we call like those trades that have been trending lower overall. If this turns around, gets above the exponential moving average, I think, and put the stop at the lows of that there. I mean, look at the daily chart candlestick there. So I think all these daily chart candles looks very interesting. And as we take a look at any other, yen currency pair, I think they all kind of look similar. So maybe there is a continuity there. So yeah, like I said, the yen and the Swiss franc, I think both looks interesting, and the euro, for a retreat. And then what do you want to buy against it? Whichever currency is actually doing better. I think there's a decent risk to the board in all of these trades.
Great analysis, Ankit. But for me, I cannot be short euro and Swiss franc because it violates my rule of the 50-day moving average, which is why that I'm only going to be looking at yen crosses. I don't disagree with you that they probably weaken a bit, but again, finding relative strength and weakness, the yen is the only one that is trading below its 50 for my rules. So for me, it's yen only this week. Let's wrap this up. Those European currencies are holding strong. They are holding up there. If there is more selling in the market, in the equity market, then I think the European currencies are definitely the place to be. And I wouldn't want to be short yen if we start to get some selling in equities. So it's really, the short yen trade is really predicated on a risk on recovery in equities. If that doesn't happen, I think euro against Aussie, against Kiwi, Swiss franc against Aussie, Kiwi, I think that's the trade if we get some selling. Everyone have a great weekend. Thanks for joining us. Goodbye, everyone.